Hello, folks. Welcome to the Weekend Investing Daily Bite for Friday, 5th of December, end of the week. Not such a great week for the broader market, but for the large caps and some larger mid caps, it was not such a bad day. RBI monetary policy came in the morning and cut the interest rates by quarter percent. It was a bit expected, I would say, but not entirely. The market did get surprised. We were in pretty much negative territory before the announcement, and then post the announcement we moved into the green. So there was an element of surprise for the market. Interest rate sensitive stocks certainly went up, and some sectors like real estate jumped up but could not really sustain the momentum on the higher side. The other part of the market, which is basically small caps and micro caps, they are now in some deep red territory, wherein micro caps actually lost a major support on the charts and small caps are almost there. So it's a very divided market where the top end of the market is inching up while the bottom end of the market is falling down like a rock. So a sort of a imbalance has been created in the market with no immediate triggers. Yes, President Putin is there in India, and that perhaps puts the US-India treaty on the back burner. Nobody's even talking about it now. And if we are going to announce more defense deals, that treaty is going to be in more jeopardy. Um, the funny part about today's RBI narrative post the announcement was that the growth rates that they have mentioned are likely, and the inflation that is likely in the next year did not enthuse the rupee at all. So rupee again has closed near 90, and one was hoping that with some assurance from the RBI governor is going to cause some confidence in the currency. But the governor said that we will not intervene. Let the market decide where the rupee is going to go, hinting that perhaps rupee is going to go much lower. I mean, that's the inference I am taking out of it. I mean, you cut the rate and then you say let the rupee go where it wants to go. Uh, I think it's a subtle hint that it will go lower, although we cannot never be sure. So let's look at some charts now. Disclaimer, as always, please read the disclaimer fully, understand it, and only then move forward in the video. The markets charts are right there in front of you, 0.59% on the Nifty. So Nifty chart is not looking bad at all. Nifty chart is actually looking like that this huge rally that we had a correction after that, and now we are on a continuation mode, and just one more day like this can put us to new highs once again. So Nifty has no problem whatsoever. Nifty Junior, as you can see, came back from the lows, closed at 0.22%. Yes, not too hot in terms of the gain made today, but nevertheless, it is hanging in there. Mid caps also swung back, so from the bottom of 22,021 uh, to close at 22,207, so almost a 200 point swing in the mid cap space. So mid caps also seem to be stabilizing a bit. Small caps is where the trauma is, where despite the U-turn in the market, small caps continued to fall 0.5% down on small caps, and this is the seventh continuous session where small caps have fallen. Bank Nifty, of course, was very enthused with the rate cut, 0.82% on Nifty Bank, again closing very near daily as well as weekly highs. Gold is inching up 0.65% up to date. 12,958 is the rupee per gram rate. So almost 13,000, you can say, or 1,30,000 per 10 grams. And we are very near the previous highs. Silver also moving up 1.87%, 1,78,387 per kg. Also looking good in terms of the charts. Advanced decline trends, while remaining in the favor of declines, uh, you can see that the advances line, the green line, was actually inching up through the day, while the decline line came down. So that is the only sort of silver lining you can draw out of this chart. Um, Otherwise, I mean, there was no market breadth as such in terms of the positive. Nifty heat map was reasonably good. Hindustan Levers losing 5%. I think this is one of the biggest falls in Hindustan Lever stock I've seen in recent times. Some good gains in banking and finance stocks. The IT stocks continued, I think, on the back of the fact that rupee is not yet showing any strength. Autos, cement, steel, all moving up on interest rate advantage that they would get. Nifty next 50 heat map, however, had significant number of reds along with the green. The PSU banks recovered today after the drubbing yesterday. Some stocks in the FMCG space, Britannia, uh, Godrej CP, United Spirits, and you had other stocks like DMart, BPCL move up, and you had some losses in LIC, HAL, Solar Industries, Hyundai, uh, and Vedanta. Mover of the day segment, which stock moved the most, is Mahindra and Mahindra Finance. So 5.92%. Company has received a regulatory nod for a co-branded credit card. I'm sure that is not the only reason. The stock had been moving up and was waiting for a market correction to get over to get along with it. Disclaimer: we may hold this stock in many of our portfolios. Uh, Sectoral trends, let's see where each sector went. So PSU banks coming back very strongly, 1.5%. But if we see over the last 1 week, PSU banks are still down 1.5%. So some recovery of the loss. Financial services stocks up almost a percent, IT almost a percent, Nifty banking overall up 0.82%, autos up 0.74%, services sector also up 0.7% or so. What lost ground was defense, 0.7%. You can see in the last 1 week, we've lost 2.6% on defense. In the last 1 month, we're down 3%. And if we see the whole year, defense is still up 13%. The worst performer this year so far is Nifty Media, and the best performer so far is Nifty Auto at 17% in the last 1 year. Uh, in the PSU banking space, SBI, PNB, Bank of Baroda, Indian Bank, Bank of India were in the lead. Although I'm not sure if the downtrend is yet over for the banking stocks. Today, of course, was a run due to the rate cut. In the US markets in the previous session, you had some good gains in Russell, 0.75% on Russell. Others were very muted. Nasdaq, S&P 500, and Dow Jones were extremely muted. Some of the stocks that lost yesterday were Intel at minus 7.5%, UPS, Costco, Starbucks, and 3M. These were the stocks losing ground. Some of these stocks may be part of the weekend investing strategy on the US markets, and these are certainly not recommendations. So some of these stocks which were running up very hard are taking some break in the US markets as well. In the tweets of the day segment, one thing is coming out to be very clear that people who only invest in, I don't know if I should call it investment, but who only keep their money in bank FDs are going to have even a tougher time going ahead. Um, the reason here being that interest rates are coming down and there is no inflation fear in sight. So perhaps we've cut half a quarter percent now, and perhaps we will cut another quarter percent in coming months. And that, of course, will translate into lower and lower FD returns. Of course, the taxation is also there on the FDs. So essentially, while you can say that the official figure of inflation is below 4% and I'm making 5.5% or whatever it may be, in real terms, you have to see your own inflation, what you use as goods and services, and what is the inflation you are facing. If housing, medical, education are parts of it, certainly it is not anywhere near 4% from a general perspective. So it is a great time, I think, for those people, especially, to start to think about allocating to the market. Indian households still allocate lesser to the stock markets than they do to insurance, than they do to fixed deposits. And I think that number needs to go up gradually. And the best way to do that is to, allocate small. So I always give this example, and I'll take another 20 seconds to do that. If you have 100 rupees with you and you're always afraid of the market, invest 10 in the markets through any vehicle that you choose, mutual fund, small case, whatever you may choose. But choose a vehicle that has some self-correcting mechanism. Self-correcting meaning there is somebody who's taking care of that portfolio, and you're not in direct stocks which may or may not return from their journey down. So you invest, and or better still, maybe if you're starting out, index funds are not bad either. So you invest 10, you still have 90 in your FD. 1 year later, the worst case scenario will can be thought about, that 10 rupees in markets will become 5. Let's say 50% crash in the markets all over the place, and your FD makes you 5% post tax, hopefully. So your 90 is almost 95 in the FD. and you make your 10 in the market goes to 5. So at the end of the year, in the worst case situation, you are still with 100. So you've lost opportunity cost of 1 year, yes, but you are also at the cusp of a major bull rally, because after 50% drop, you will have a great rally in the markets, and you can allocate 20% at that time or 30% at that time. So gradual allocation to the market always helps. As you allocate, create a buffer so that you don't feel like your capital is going away. Whenever the market will come down, it will feel as if, I made some money from the market, some of that is going away. So it will make you comfortable with the market, and that's how you gradually over a period of time you can achieve 20, 30, 40, 50% wherever is the allocation you want to go. The problem with most people is that they want to go from 100 in FD to 100 in stocks or 18 stocks, and that becomes a extremely difficult psychological experiment for them, because they haven't experienced volatility ever before. So it has to be taken, Atomic Habits. If you haven't read, please read that book. Baby steps need to be taken so that you are in tune with that kind of a move. The second tweet was about microcaps. This is the Nifty Microcap 250 index. You can see how beautifully it has taken support at this point, and today and yesterday it basically broke down from here. Now, the key point here is that we have a big gap here. Maybe I should have drawn it on the chart, but there's a big gap here on May 7th or May 8th. And this rally that you had, these 4 or 5 days, this was also very thin volume rally that we had. So there is potential that this region may get revisited, and revisited fast. So that is the sort of fear in microcap stocks, and the small caps are also not too far behind there at this edge in terms of their chart. Today is Friday, so we will be doing an Ask Weekend Investing round where we will take on queries posed to us. Do watch our next video for that. We've done 70 rounds before, answered a lot of questions. If you like, you can join the Weekend Investing Community. So there's a link in the description below. You can drop your email, and you'll start getting premium market insights. If you like our content, do like and share this video, and do certainly subscribe to our channel. Thanks. Bye.